Good day everyone. I'm Alex, moderator for this webinar. I welcome everyone for today's webinar, which is Employee Expense Reimbursements. I would now like to introduce our presenter for today, Dana J. Reim. Dana has been heavily involved in the payroll for field for the 17 years. I would now like to hand over the floor to the speaker. Over to you, Dana.
Thank you, and welcome to our presentation today on travel pay, travel expenses, and employer liabilities. So let's talk about what we're going to review today. So first, we're going to understand gross pay and how you should determine time worked. We'll dive into IRS expense reimbursement requirements and understand those requirements and review some best practices in regards to some special areas as well in this space. So defining hours worked, this is critical because from a defining hours worked perspective, it is so very important to understand how the federal law sees who you should be paying and what is considered hours worked. All right, so preliminary and post-preliminary activities. Some key things here from a preliminary and post-preliminary activities. These activities to where an individual is performing services for you. In your handout, I do give you some examples of some court cases. I find that this is important to drive learning home, right, from a court case perspective. Waiting and on-call time. Waiting and on-call time, again, from a federal perspective, has always been about the restrictions you put on the employer. Again, this was challenging, right, because then people started asking, well, what restrictions? In what extent are these restrictions? And that's where a federal case, Berry versus County of Sonoma, sorry about that, in 1994 really set some additional standards. Now, a key thing to mention is, again, that geographic restriction. What other restrictions are critical? The other key thing is that on-call employees can easily trade their on-call responsibilities with other employees. And then to what extent the employees engage in personal activities during the on-call period. So again, on-call time, these are the basic restrictions, but is compensable based on the amount of restriction. So if there's no restriction, the employee really can do whatever they want. All right, let's talk a little bit about waiting and what that looks like. Waiting to be engaged and engaged to be waiting. This is an important piece here. So always like to remind people of this. Again, here is a court case. Again, I think these court cases are so valuable because it really shows how the courts have applied these rules. Meetings and trainings. So from an attendance from a meetings and trainings perspective, these types of programs must meet, 4 criteria to be counted as time worked. So there's 4 key criteria that it must meet to be time worked. So if all 4 of these are met, then it's not compensable. Travel pay. So from a travel pay perspective, you do need to use the laws from the Portal to Portal Act of 1947. The Portal to Portal Act governs how travel pay is to be paid to employees, if applicable. Now, travel pay that is part of the employee's job is compensable. IRS expense reimbursement requirements. So now that we talked about who is paid and how are they paid, let's talk about these expense reimbursements, right? These employees who are traveling for you, they're all over the place. Understanding that payroll piece is important. Now, once the expense has met those requirements, then the next key thing to consider is the reimbursement and allowance. There is guidance from the IRS on 2 different plans that you can use, an accountable plan and a non-accountable plan. So why is one more feasible for employees versus the other? An accountable plan means that you have met all the requirements of the IRS and you can reimburse your employee at a non-taxable event. If it's a non-accountable plan, then you're going to lose a lot of the benefit here. If any expenses reimbursed under an accountable plan are not substantiated, so you don't have that backup documentation, adequate accounting, means multiple things. Excess reimbursements or allowances. So what is that? An excess reimbursement or allowance is any amount that you pay to the employee that is more than the business-related expense for which the employee adequately accounted for. Reasonable period of time. So from a reasonable period of time perspective, this depends on the facts and circumstances. Last but not least, your employees should return any excess reimbursements within 120 days. Now, if all the prior requirements are met, then it's a non-accountable, it's an accountable plan. This is from publication 535 that the IRS puts out. Please feel free to use that. Now, daily transit, the IRS did put some additional rules. Temporary work location is defined the same as the other expense rules previously reviewed. All right, web-based reimbursement plans. So the IRS has issued 2 private letter rulings. The IRS did allow the expense reports to be substantiated as long as a description of the expense. And it goes into great detail in here about the standard meal allowance. Meals and entertainment, that it was being reduced. The deduction is being reduced to nothing. I believe it's in 2024. The federal mileage rate. So just want to make sure that you are aware for transportation, you can pay the federal mileage rate. Again, those accountable plans and the taxation that's in here. Be careful with the pattern of abuse. Again, if the IRS sees too many times that you're falling out of your accountable plan, they will deem your whole plan non-accountable. I always get the question, okay, well, what should be paid through a payroll and AP? Spousal travel. So from a spousal travel perspective, business travel expenses for a spouse most of the time is taxable to the employee unless they meet these requirements. Frequent flyer miles. So if somebody is denied booking because of an overbooked flight, or they took a penalty payment or got free flights because they had to take a delay, that is the employees. You do not have to tax them for it. So we covered a lot of information in a short period of time. I want to say thank you so very much for attending today's webinar. I hope you got a lot of valuable information out of today's webinar and found it a good use of your time. And I just want to say thank you very much, and that I wish you all a really great day.
Thank you, Dana. That does conclude the session for today. Thank you everyone for participating. You may all disconnect now. Have a great day ahead.